I'm Chris DiPaolo at Werner & Company CPAs, and today I'm going to talk to you about business mileage. So one of the most frequent questions that we get asked here at our CPA firm is, should I deduct my actual mileage expenses or should I take the standard deduction? So I'm going to go over a brief overview and just touch on the three typical mileage rates that there are, and those are business mileage, which you can deduct 53.5 cents per mile. There's the medical mileage, which allows you 17 cents per mile, and charitable mileage, which is 14 cents. So we'll start with charitable. For those of you that drive you serve on a board meeting or you're volunteering for an organization, there you could keep a log of the mileage that you drive for a volunteer basis, and at the end of the year you'd get a deduction of 14 cents per that mile on your Schedule A. For those of you in the medical that drive around a lot for transportation, maybe it's an older parent or a dependent that's on your tax return. For that, you can deduct 17 cents a mile. And for those of you with the flexible spendings or a health savings account, if you keep that detailed log and you're getting near the end of the year, you can actually reimburse yourself for those medical miles driven. So that's another one. And now we're into the businesses. So we deal here with a lot of small business owners, and they're always questioning, okay, which is it that I should take? So most think, oh, if I take the standard mileage, I have to keep very little records and I don't have anything to worry about. And that's not true. You need to keep a mileage log, and I recommend clients that they keep that either monthly or weekly. You know, daily's the best. You can download an app on your phone, and as soon as you're in the car, you hit go, and you're off and going, and it does all the tracking, and it exports into a CSV file. They send it to us. We use it on their tax return. If you decide to, where you're buying a vehicle, such as we have plumbing companies that they'll buy vans and they'll have their work vans, and they're going to depreciate that vehicle, then we've got to use the actual expenses. And what I mean by that, we need to be deducting, you've got to keep your gas receipts, you've got to keep your oil maintenance, any insurance record keeping, if you get new tires, all of that maintenance gets bundled up, and at the end of the year, we deduct that. But with that, you also still need to keep track of your mileage. So when you take your actual expenses, you're still keeping your log of your mileage, while at the same time keeping track of all your actual. Any questions? Give us a call.